it gives me great pleasure to introduce Mark Cutifani, the CEO of Anglo American PLC since 2013. Mark is a qualified mining engineer with more than 45 years of broad experience on projects, operations, marketing, business development, and finance. Mark is also the chairman of the De Beers Group of Companies, a non-executive director of Total SA, and a non-executive director of Anglo American Platinum Limited. Mark has considerable experience in mining and have been associated with the industry since 1976. He has practical working knowledge of the most commodities produced and sold across the world. He also has had line experience and responsibility for mining and industrial business across 6 continents. Prior to joining Anglo American, he held the position of Chief Executive at Anglo Gold Ashanti, based in South Africa. And before that, he was COO for Inco and then Vale's global nickel business based out of Canada. Welcome, Mark. It's a pleasure to have you with us today.
Thanks, Henry. Great to be here.
All right. So let's start off by reviewing the company's fourth quarter and full year operating results. Let's look at key operating highlights, including diamonds and PGMs, which seem to have been particularly important for the company through the year, as well as iron ore and copper.
Yeah, look, I think the precious metals or the PGM story has been very important. We had quite a few operating challenges in 2020, and then we had COVID. So the recovery last year was particularly important. Record production out of our refineries, so very solid production and sales off very good prices. So a great year for the business, a record year, in fact. Diamonds, also a recovery story, and we also spent quite a bit of money marketing products. So we've seen, as of the last month, about a 30% increase in the prices for diamonds over the last 14 months. So that's been a really important improvement story through the year. And then we've had pretty solid results from copper and iron ore, and they've been doing pretty well over the last few years, but with good prices, it makes it all the better. So generally solid, not as good as we could be. I think in looking at COVID and those sorts of things, probably a 5% impact on our production, but generally very good year, good solid prices, and I'd expect, based on consensus numbers, if I just talk to consensus, that we will show our best ever operating results for the business, and certainly we can do a lot better, but I'm sure you'll probably ask me a few more questions about those sorts of things a little bit later.
Yes, absolutely. Okay. All right, so let's start with some broad themes and unpack Anglo American's story via that. So the energy transition is a hot topic at present, and the company has been signaling its strategic positioning in terms of the future enabling metals you produce. For instance, it recently guided for increased copper production from your new mine in Peru and partnering to support green steel development. Please walk us through some of the key strategic initiatives the company is undertaking to take advantage of the energy revolution and net zero carbon emission goals.
Yeah, maybe if I start, I'll give you 30 seconds on our strategy. We see ourselves as a material solutions company, and that is we look at the world, what it requires, and try and make sure we're delivering raw materials in terms of driving where the world, or supporting where the world's going in terms of change. We look at quality of assets in those commodities in which we work. So it's not simply about trying to pick a winner in a commodity. It's more about quality of assets, making sure the cost structures are right, and then doing really well with good assets. But at the same time, we're keeping an eye on the way the world is going. So energy transition, climate change, energy transition, circular economy, major technical changes, all these things feed into a way of, or the way we think about setting up the portfolio. So today, 85% of the commodities in which we operate, we call future-facing commodities. They either support these big or mega trends that we see on a global basis, or they're playing into the consumer space like diamonds, or with met coal, it's a really important metal in terms of the transition from current steel technologies to green technology, which is hydrogen, but we're also investing in hydrogen. So a really big push, and we've been shaping the portfolio over the last 9 or 10 years. And I think, unlike some who are sort of more concentrated in 1 or 2 or 3 commodities, we've got a much broader suite of commodities. We've got a great suite of assets, which allows us to allocate our capital, I think, a little more wisely and effectively. And in fact, if you look at our returns over the last 9 years, we've outperformed our major competitors. So I think the proof has been in the pudding. And we think for the next 10 years, we are really well positioned for growth as well.
Oh, that segues nicely into my next question. So Anglo American has in recent months communicated its strategic growth goal of 35% over the next decade at an attractive 50% margin. Please walk us through the key catalysts on the road to meeting these goals.
Okay, so as I said, we focused on high quality assets that have scale and also optionality in the way you operate and improve your cost structures. And so continuing the improvement journey on the assets, we have about 35 assets, is the first step. So new technologies, better recoveries, new ways of producing more with less capital, all those things feed into growth and improvement. That's a starting point. Making or helping do better or doing better with what we've got, first step. Secondly, we've got a great portfolio of new growth options. So our Quellaveco project in Peru will add 10% top line growth to the company, very low operating costs, very good margins. So the growth that we're introducing is also very low operating costs. So it continues to help us improve our margins. And we've got Quellaveco. We've just announced the Aquila mine in Australia has been commissioned on time and on budget. New big ship in the Namibian Diamonds area, that's another addition. We've got the Woodsmith project, which is polyhalite, and we've got incremental growth opportunities in our big projects, Collahuasi in copper, Los Bronces in copper, both in Chile, and we've got other incremental projects in iron ore that can all grow and continue to enhance the portfolio over the next 10 years. So what differentiates us is the breadth of our exposure to future-facing commodities. It also is about the quality of the assets and the growth opportunities we have. So the next 10 years has been mapped out, and we're already thinking about the platforms for 2040.
Yeah, absolutely. And then when it comes to climate change, how is Anglo American setting itself apart from the competition?
So we've thought long and hard about our transition. And earlier I talked about innovation and technology. We see a transition from traditional fossil fuels and the older fuel types to the new technologies is both an opportunity to improve our environmental credentials and reduce our operating costs to be more competitive. So already today, we will have, and it's in process now, all of our South American assets on renewable input supply on energy to those operations. Now, we're still using diesel fuel in the operations, but what we're also then looking at is using solar, wind power or hydropower to then create hydrogen and use batteries. So we've got a hydrogen battery hybrid truck that we've built and we're trialling in South Africa. So we can then replace the diesel we're using. So we'll have renewables in, then we'll substantially change the energy mix inside the mine perimeter. So ultimately we achieve carbon neutrality on at least 8 of our operating assets by 2030, and we'll have the whole business carbon neutral by 2040. So it's a total strategy. The third leg is working with governments to actually change their grid system so they can provide renewable energy across the fence. So for example, in South Africa, we've put to them a strategy for wind farms in the west, wind farms in the east, and these are on the coast where we've got high wind. In the north, we're looking at solar arrays, and inside our mines, we have old mines that have now filled with water, and we can use solar power to fuel our operations or drive our operations. And during the day, when we've got more capacity, we can pump the water out of the underground mines into a dam and then let it run back at night. And so we've created a battery out of an old flooded underground mine. So we're now putting to use in an environmentally sensitive way the old mines that have been banded over the years that have got water. So we're thinking about how we use the resources we have to create smaller footprints in terms of energy use, water consumption, and our physical footprints in the operations.
Yeah, absolutely. So that also segues into the use of PGMs, which is a major contributor to your revenue stream. How is the emergence of commercial hydrogen fuel cell powered vehicles impacting your strategy? And do you see hydrogen playing a critical role in growing PGM demand going forward?
Yeah, I think we've got to look at hydrogen in two parts. And many would say there's a few other elements, but if I keep it direct for this conversation, hydrogen provides us with a way to store and use energy in mobile applications. So a hydrogen cell, a bit like a natural gas cylinder in your car, hydrogen could be used the same way. So there are really smart ways of using hydrogen in the transportation space. So you're seeing trains, commercial vehicles, trucks, where you can fuel a vehicle once over 24 hours, because the range you get with hydrogen is quite extended compared to a battery, and you don't have the weight of a battery, so it's a more efficient use of energy. But we don't have large-scale hydrogen production on a global basis. So what we've said is the way to harness hydrogen today is look at renewable input, use the renewable energy, no carbon to make hydrogen, and then use the hydrogen to replace diesel in your trucks. And that gives us a virtuous circle. Now, that use of hydrogen requires platinum and palladium to be a catalyst, more so the platinum and iridium as a catalyst to convert or to create the hydrogen from electrolysis of water. And so that will provide us with a demand increase of probably 10 to 20% by 2030. But the bigger game is when we see large-scale investment in primary hydrogen production, which is on a much bigger scale, but that won't come until 2035, 2040. So some incremental additions, 10 to 20% in scale to 2030. The big game changes occur through the 2030s as we start to look for larger scale replacements for fossil fuels and other energy supply. So we're playing the long game in PGMs. We've got lots of other industrial applications. So how do we keep improving the use in those industrial applications and get ready for the use in the hydrogen industry, which I think really takes off by 2035.
All right. So the groundwork is being laid at the moment with the emergence of the electric vehicle, and essentially hydrogen fuel powered vehicles will be using the same kind of electric chassis. It's just a different power provider.
Yeah, I think the other thing we haven't spoken, people talk about the hydrogen truck, it's actually a hydrogen battery truck. So we've got the best of both worlds. So we've got Mr. Elon Musk on one side and Mr. Hydrogen, whoever, Miss Hydrogen, Ms. Hydrogen, whoever that may be, on the other side. We're bringing both those technologies because they have different characteristics in terms of energy density and use going uphill or downhill. And so by marrying those in an appropriate way, we get the most efficient vehicle for its application in the mine. That's why what we're doing is really unique and quite, we think, revolutionary in terms of vehicles and application, which we think has a much broader application. So we're very excited with the work that's been done.
So resource development is one aspect of what you invest in, but then investing in new technologies is another key piece to the company's success, right?
Well, absolutely. So if you go back 100 years, and Sudbury's a great case in point, the amount of material we had to move and the energy we used, we're using 16 times the energy, we're moving 16 times the amount of material compared to 100 years ago to produce a pound of copper. So today we look at mining and say, we can't just keep going up that energy consumption curve and big footprints, we've got to be more precise. We've got to think about smarter ways of doing things. So by 2030, we will have reduced the energy intensity of our operations by 30%. So of that 16, we'll have taken 5 points back off that and start turning the clock back. We're also going to use half the water. So we're using twice the amount of water compared to 100 years ago. We're going to turn that back to 100 years by being more efficient in our processes. And for us, doing those sorts of things also improves your competitive cost position. So we've industrialized our operating processes. So we've thought more like industrialists, auto manufacturers, those type of very efficient operating processes where they really do compete tooth and nail. We've applied that to our processes in mining, and we're introducing new technologies to try and get ourselves ahead of our competitors much more quickly, so that we're producing those margins, and the better than 50% margin includes those types of technologies and these new operating processes as well. By the way, some of these new operating processes we've been implementing in the last 9 years, we did a lot of work in Sudbury in Canada, developing these processes around the Inco operations in Sudbury.
Wonderful. Yeah, no, okay. So I'd like to take a minute to just stand still at a few of the company's key commodities. Just earlier, you mentioned that diamonds have shown a recovery in prices since the previous reporting period. Can you please elaborate a little bit more about what is driving that price increase and how the company is positioning to leverage, value off of that?
Okay, so I think first, we've been investing in marketing diamonds at a generic level, so encouraging demand on a global basis. And with a growing middle class, growth in demand for diamonds is around 2 or 3% per year. So that's the first step. So making sure that we're presenting the diamond story and making sure people understand the emotional attachment, how rare a diamond is, what it says about a relationship, that's been really important. Second, the big challenge we have, because there's not been much exploration and new discovery, the supply of diamonds is getting tougher. So what was a rare product is becoming even rarer. And so demand, supply falling away tends to impact prices. Now, the other thing we're doing is we've spent and invested a lot of money in marketing to various consumer groups, age groups, women and men in different ways, singles, married couples, partners of all shapes and sizes. And that differentiated marketing is also having a very positive effect. So we've seen a 30% increase in the last 14 or 15 months, and it's a combination of all of those dynamics. So I'm very optimistic about diamonds going forward. Maybe we won't get another 30% in the next 15, 18 months. We certainly don't want to impact demand for the product. But given the products are becoming even rarer, we still think the prognosis is pretty good. But you've got to get in there, you've got to market your product, you've got to do the best you can. And I think we're doing a lot better on that front these days.
And laboratory-grown diamonds are not taking your lunch at this point.
No, we don't think so. Now, don't forget, we're also a lab-grown diamond producer with our Lightbox product. Now, we are one of the largest producers of industrial diamonds in the world for industrial applications. Lab-grown takes that technology, which we've developed, and there are others with different technologies. But we see those products developed in a lab, they're all the same, nothing different. We're a natural diamond, every one is unique, it has its own fingerprint. And we think that the lab-grown products are more a fashion accessory, fun, not as expensive, whereas the natural product is the real deal. And if you're buying something for a partner, whoever they may be, if you want to say something about the nature of the relationship and the unique relationship and bond you have, then it's a natural. If you want to have fun, buy stuff for fashion accessories, there's about a 70% difference in the price, and that reflects the nature of the product, where it's come from, and how rare the products are.
All right. Quickly, let's talk about copper. Some analysts have in recent weeks mentioned that they believe copper might be headed to a super cycle territory in the medium term from about 2025. Do you share those sentiments?
Look, I think the world is short copper. And so from my perspective, that suggests prices will be strong. I think we've always got to be a little bit careful that if it gets too strong, then substitution will likely occur. But at the moment, at $4.50, whatever it is, I still see potential upside if demand keeps growing. I don't think people fully understand how much copper we're going to need in the energy transition. And therefore, I'm not seeing enough copper being developed. And with that, I would expect copper to continue to be strong. We need governments, we need communities, we need miners to get together and work out how we can improve some of these projects to fill that demand. If not, we won't have enough the materials to actually manage the energy transition, or there will be substitutes which may not be as efficient. So it's in everyone's interest to try and get that balance right. But all in all, with all of that, copper looks strong.
All right. And then let's look at the Woodsmith polyhalite fertilizer project. It's another key growth element in your strategy. Let's talk about why fertilizer is of interest at the moment, and what is the latest update from the project. I see you've also rejected the leadership recently. What does the new leadership bring to the table regarding that project?
Okay, so firstly, the concept. The polyhalite means multiple salts. So the product is quite different. It's not just a phosphate or a sort of standard product that we know today. And, you know, obviously Canada's been very active in those markets. This has got multiple nutrients and it's got very low salt, and the carbon footprint is extremely low. So this is really unique. So we think this product plays into the market across all of the major global, both bulk markets and high quality crop markets. So it's quite unique, very low cost because we can mine it using bulk methods, and we don't have all the downstream processing that you go through with potash and other products. So we think it's more environmentally friendly, and it also helps encourage soil health because it's an organic product that will, if you're using this product, then you can classify your products as organic because it's a run of mine, not significant downstream processing, and very small carbon footprint. So we think it's low cost, highly differentiated as a product, and since we bought the asset, the product is trading at about 60 to 70% higher price as people start to recognise its potential. Now, we're going to have to grow the market, but we've got the scale of deposit. We've got the ability to grow that. And so for us, we think it's a 50-year asset, very low cost, high value, and plays into a more environmental world, particularly in terms of the agricultural sector, because we need to see better productivities in agriculture because we can't keep giving over land from agriculture and taking forests down and reducing our ability to absorb carbon. We've got to get higher productivity from the land we have, and this is the sort of product that makes a real difference in so many different ways. So we think it's a great place to be.
So if I'm just understanding this correctly, are you inferring that the polyhalite is in fact a more desirable product than potash? In terms of meeting ESG and all kinds of sustainability goals?
Absolutely. However, I'm not being critical of potash. What I'm saying, this is a product that can be blended with potash because it's got low salt and it's got other nutrient characteristics that we think help improve the overall use of fertilizers in a number of applications. So again, potash has its uses, very important in terms of the markets, but this is very different. It has potassium, as does potash, not as much, but we have other nutrients. That means that we're creating more value in other ways. We're also got very low salt and other physical characteristics that are desirable. And so for us, it becomes an important nutrient consideration for the farmer that really is looking at improving product yield, and doing it in an environmentally friendly way.
All right, that's very interesting. Okay, and another big topic, ESG. That's certainly an investor hot topic at the moment. Can you please share some key insights from Anglo's journey on ESG? As follow-ups to that question, what comes after ESG in your mind? And also, how does ESG indeed help a top-tier company such as Anglo create more value for shareholders?
Yeah, ESG, unfortunately, when you ask people what does ESG mean, there's not a lot who actually know. So if I sort of break it down into how we think about its components. So firstly, safety. Are you looking after your employees? Are you looking after the general public? In the last 15 years, we've reduced our accident rates and, in fact, our fatal injury rate, because we had significant incidents in Africa in particular, by 99%. So we've made significant I should say 98.5%. So we've made significant improvement in our safety performance. And we had one fatal incident last year, which is clearly one too many. But 7 years ago, we had 15. And so we're continuing on that journey. Health incidents, 7 years ago, we lost 1,000 people to HIV. Last year, 1. So our responsibilities in helping employees look after themselves and make sure their health is being looked after is absolutely critical. Third, environmental. Our environmental incidents are down 95%. So we're looking after our communities and looking and doing the right thing in those communities. In terms of social complaints, we're down 90%. And since COVID, we've had no complaints for the last 2 years, and these are we level them on the basis that we've been working with our communities and supporting our communities, keeping safe in terms of COVID, doing a whole range of things in those communities and with our communities. So it means, for me, ESG is about being a responsible corporate citizen. And when you look at the G part, which is governance, it's about transparency, making sure you're part of the anti-slavery movement, making sure your supply chains are properly managed and your product is being delivered in an appropriate way, you're ethical. All of those things for us are core to who we are, and it's about being part, or it's being part of it. It is about ESG being part of everything you do, not something separate.
And then in your view, what comes after ESG?
Well, I think it's about being a responsible corporate citizen. And so for us, it's about being a trusted member of the community. And remember, with bankers, the mining leadership, global mining leadership, is ranked at the bottom of the totem pole in terms of business and community leaders. The real measure for us is when leaders of our industry are at the top of that curve, because people understand the contribution we make to society in mining. And the simple way to put it is we provide the raw materials that make the world work. And when people, if you look at the room that you're sitting in, everything's come from mining or it's grown. And then helping people understand our role in society and making sure we're doing our work in a responsible way, so that whether it's the Pope, whether it's the Archbishop of Canterbury, whether it's the Prime Minister of Canada saying these people are doing the right thing and we understand and value their role in society, our job won't be done. And of course, it will never be done, because we always want to be better.
Yeah. All right. Okay, so finally, let's just look at COVID and the lasting impact. Would you share some of your thoughts on how the pandemic might continue to affect mineral supply chains the world over? And perhaps as a second part, any thoughts to share on COVID's impact going forward on the industry?
Yeah, look, firstly, there's no doubt 2020, 2021 seriously affected. Probably in our 2021, it's about 5% impact in our production. On a look-forward basis, it's probably down near 2 or 3% because of the new processes. But I think we're going from pandemic to being endemic. If you've been vaccinated, then the risk of COVID is certainly probably not as low as flu, but it's in that range. If you haven't been vaccinated, then you can dial up your risk 5 times in terms of being seriously ill. So we encourage everyone to be vaccinated. We would hope that if everyone gets vaccinated, let's say by the end of the year, then we will be talking about COVID in the same way we talk about the flu. That's an oversimplification, but that's the key. And everything we're doing is trying to get us there. With that in mind, we still think there's potential for other things to impact because of global movement of people and the way we all work. So we've got to work out how to deal with these things in a more effective way. But we think by the end of 22, we can move forward and we'll be managing those issues in COVID. And it won't be the type of issue that it has been in the last 2 or 3 years. But I think it does alert us to the fact that things are very fragile, that we need to look after each other, and we need to work out how to deal with these things in a much more effective way. So, big issue. But for us, we've had to go out to the communities, and what we've said is this is not a work issue. This is a community issue. We're part of the community. What can we do with our communities, keeping water supply, energy supply, making sure people are fed? In many cases, we've had to deliver thousands of food packs to local communities that couldn't get food because transport lines have stopped. So understanding how we could impact that whole infrastructure and integrated supply chain has been really important to us. And I still think we're recovering that. It'll probably take another 12 months for those supply chains to recover. But today, we've been pretty resilient. We've been able to manage the situation. We'll continue to improve.
Yeah, absolutely. All right. So that's been a whirlwind journey through your world. We've almost reached the end of our session. Perhaps I'll just throw it open to you. Finally, is there perhaps any other topic or point that you'd like to raise that I've not specifically asked you about that's pertinent to the company's performance going forward this year?
Look, when we reflect on this year's performance, and when you reflect on an annual set of numbers, I think sometimes you've got to look in broader context. For us, I can't obviously forecast what numbers we'll present at year end, but it's very clear that we've had a pretty impressive year. We were already at or about record annual performance at the half year, believe it or not. So that tells you how significant the year has been, but it's been a journey. The last 9 years, as I said, we've made significant ground in all of our sustainability metrics. We've doubled productivity. We've reduced our operating costs in real terms by more than 50%. But most importantly, in defining a purpose for the organisation, and that is to reimagine mining to improve people's lives, it means that we're touching every part of the business and looking how we can create partnerships, whether it's in the community, whether it's with employees, whether it's with governments, whether it's a whole range of stakeholders, including our most critical NGOs. At the end of the day, if we can create partnerships and an understanding of what we do, how we can do what we do better, then for us, that's the key, in my view, to creating a resilient organisation, an organisation that can deliver sustainability. And as of the last 9 years, we've been the best performer as measured by total shareholder return. And in my view, that's just one metric, but it's all the other metrics that I talk about and the measures that go in to make up that number and to support that on a sustainable basis. And I think that's what has differentiated us and will differentiate us for the next 10 to 20 years.
Excellent points. Well, thank you very much, Mark Cutifani, CEO of Anglo American PLC.
Thanks, Henry. Cheers.